So let's talk about this. Isolated, so the margins, cross and isolated. Now you can read all of this, but the quick answer is that with isolated, in terms of the margin requirements, it is per position, as in per symbol. So like we were playing with, I mean, let's have a look at this shitcoin, GMT, Steppen. So I could place a trade, and obviously when I place a trade, let's buy that. Let's just short this for a moment. Now, let's say I didn't have a stop loss. Really, this isolated cross thing is for people like if you use stop losses, none of these really make a difference. But if you don't use stop losses, you definitely want to be on isolated, because what could happen is that, let's say GMT runs away against you. What will happen is that this trade, and you get margin called based on this. Let's say, you know, it hits liquidation price. It will only kill this GMT trade. Okay, so every single symbol, so GMT, USDT, that will have its own liquidation price. When you're trading with cross, so again, with isolated, the amount of position margin you have dictates your liquidation price. So for example, if I added more position margin into this, my liquidation price will go down. So here, that's my liquidation price there. If I added, say, 50% more margin, boom, I'd have a far higher liquidation price. I'm shorting this, by the way. That's why. So I've got more buffer. So that's why it went up. So yeah. So if things are getting tight, you can always add more margin. You can only take margin away of extra margin. So if you've added margin, you can then take that away if you want, but you can't take away what's originally there. So as you can see here, for this trade, I've used 46 cents worth of margin. But yeah. So that's the isolated. So I just leave it on isolated. With the way that we trade, doesn't really matter. But I think it's always worth doing, because if you have cross margin, what it does is it uses your whole account as the instead of having individual pots, etc. It will use your whole account. So now we're on cross. It's saying that the liquidation price is like 199. It's freaking miles away, because it's using my whole account to cover that. And so let's say you had a whole bank of trades like this, and you're on cross margin, and all of a sudden one of the trades goes in the wrong direction in a really bad way. One bad trade could kill, like, wipe out all the profits and of every other good trade, if that makes sense. So always have it on isolated. Just a top tip. In fact, whilst we're here, let's go through what some of these mean. So contracts, that's what we're trading. Quantity, that's how much GMT we're shorting right now. If it's red, it means you're shorting. If it's green, it means you're going long. That's the value of the trade, or that's the value of each GMT. Entry price, yep. Mark price, yeah. Very similar, it's about 20 cents off. Liquidation price, it's fine. Position margin, we've talked about. Unrealized P&L, this is your floating profits. Okay, floating profits or losses. So right now it's pretty much break even. Now, this percentage bit confused me to begin with. I couldn't work it out. So it's good that I took this screenshot actually. Before we go any further, I just want to have a little look, see. Yeah, things are having a bit of a pullback anyway. Probably wasn't a bad time to close all trades. I do want to get back in the market though. I really do. I will. Oh, look at that! S&P's gap down. Oh, this is going to be glorious. Die, markets, die. Yeah, so I couldn't work it out. But the easy way to do that is, let's just focus on one of these. In fact, yeah, here's GMT, previous trade. Okay, so this is where I'm getting my little annotator pen out. so you can see this GMT trade that was the position size. So I was basically shorting 175,000 GMT tokens. The value of the whole trade was worth that. Obviously, you've got the entry, mark, liquidation price. Yep, that's fine. Now the position margin. So my account had basically stumped up. So it's basically taken 90 grand from my main pot and put it aside and just basically put it in the GMT pot, right? So if all went wrong, only that margin. Well, in fact, I wouldn't even lose that. What you lose if you get margin called is the floating P&L. Now the thing that confused me was this bit here, this percentage bit. I couldn't work it out until I had a proper look at it, because it says here that I'm 58.93% up, but based on up on what? Obviously the price hadn't gone up. Gone down 58%, because look, I shorted it at 2.57, but the price at this point was 2.27. That's like a 2% drop off the top of my head. So what this means is that the profit here, the 53k, is the profit based from the position margin. That's all it is. So in other words, this percentage thing is pretty much rubbish to us in many cases. Like, you really don't need to look at it, but all it's showing you is that what it's saying is that you've stumped up 90 grand to facilitate this trade, and right now you're 53k up. So yeah, you're 58% up, so to speak. Now, although I say it's useless, I guess there is one way that you can use it as a benchmark. Normally, when this gets sort of above 10%, I then start to see, can I move the stop loss a little bit? Because if you're 10% up in profit, so let's look at Ether, this one here actually. Shorted it here.
Sorry, sir. Can I disturb you? 58% is the percentage times your leverage.
Percentage, yeah. So it's saying, yeah. So
the percent the price moved times your leverage.
No. So it's got nothing to do with the price. It's basically saying you've stumped up $90,000 to place this trade, and right now you're 53k up, and 53k is 58% of that 90k.
If you calculate the price you bought it at or sell it at,
yeah,
with the market price, it's exactly 11%, and times your leverage 5 times. It's 58%.
Ah, cool. It works both ways then.
11.77%.
Cool. Oh, it must work both ways. Yeah. So, yeah, thank you for that. You learn something every day. But the thing is, the way I use it is that when you get to about 10%, I then go, okay, the market has obviously moved. Let's take this Ether trade here. This trade is almost 10% up. I then go, oh, okay, evidently that trade has gone in my favor. So is there a way that I can move the stop? Not necessarily to break even, but can I reduce it a bit and, just take some risk off the table? Normally, when a trade gets to about sort of 20%, let's look at this Sol trade here. This is 17 here. Normally around sort of 20% is where the market's moved far enough that you can actually move to break even. Like here, we shorted Sol at 73. The market price is there. So yeah, even if you moved your stop back right down to 73.91, you'd still give the market plenty of space to breathe. So for example, if we look at Sol, actually, sorry, I can't help but look at the markets. So where's Sol? Sol. There we go. Where were we? Was it this? We shorted it at 73.91. Is it these figures here? 73. No. Let's just put this 73.90, something like that. And then the stop loss we had at that point in time was 75.67. 75.67, something like that. So wherever this trade, I don't know. I guess it would have been on this number there, yeah. So when I placed that trade, it would have been on this bar, and obviously you can see that I put my stop loss just above the wick there. The market moved down in profit, and so at this point here, yes, it's not enough to really lock in profits, but you can sensibly, you know, at least move it there, or if you, yeah, it's a bit close, but you could go to break even, take all your risk off the table, and you're not suffocating the trade too much. So yeah, normally I just use that as a rule of thumb when you get to about sort of 20%. So let's zoom in again. Where else? What else? So this daily realized P&L is how much profit, actual profit, you've locked in and banked over the last, I think, 24 hours, or it could be midnight to midnight. Again, I'm not too sure. And ultimately, you don't really know. You don't need to know. Sorry. So, for example, that GMT trade that we've just placed as an example here, you can see my daily realized P&L is 54 grand on GMT, and that's pretty much very close. Yeah, because that's when I hit the close all. Such a muppet. But yeah, so that's that. The TP/SL is basically your stop loss or take profit. So in here you can add in a stop loss and also a take profit. So for example, if you go back to GMT, we're short. Are we shorting that now? Yes, we are. So if I wanted to, let's say, have a take profit down here, I know you could say, right, I think support is around here or on that $2 level. So I want to take profit at $2.05. You can simply come onto here, click this edit button here on the TPSL, and go, right, I want to take profit at 2.05, and it'll tell you how much you're going to make. You're going to make 25 cents pretty much, so on this particular trade. So yeah, no matter how small your account is, you can still trade. As you can see here, look, just buying and selling one GMT, it's only used 23 cents. So even if you have a $100 account, you can still trade, yeah, and have some fun on Bybit. So the ADL is about if, basically this is for, with my very limited knowledge, when your account has a margin call and starts liquidating trades, it basically judges each trade by how big it is and in which order to liquidate your trades. So it has a smart way of how it liquidates your trades. But if you trade properly, like we do in RT, this will never be an issue. Same with auto margin replenishment. Like these two things are because the whole market is full of degens that don't know what they're doing, and that, you know, they're placing trades at, you know, 50x leverage or whatever. In fact, before I go any further, I need to make sure I put these back to 5. Yeah, so you don't need to worry about that. And also, by the way, the margin requirement, sorry, the cross and isolated, this margin mode is per thing. Okay, so when you trade something new for the very first time, then you'll have to, like, for example, I don't think I've ever traded Curve, and it defaults to cross 10x 10x. So, and this is the thing. Let's say I wanted to trade this, okay? So let's just take Curve. Let's find it on TradingView. So don't always find the Bybit version. And I'm just curious, actually, how's it doing for price? Oh, not very well, by the looks of it. So the first thing is that always get it to isolated. For me personally, I just five times leverage for what I do is pretty sensible. And then also, this is only for the bigger accounts that you'll need to do this. But this little cog over here on the right hand side, you'll need to click this and go to risk limits. So the risk limits basically show you how much you can risk. So what it's saying here is that at the moment I won't be able to buy or sell more than $100,000 worth of Curve, CRV. So what I've had to do with a lot of my stuff is whack it up, you know, and you can really. But the thing is, the higher you whack this up, the higher the maintenance margin and the initial margin that you have to stump up. So at the moment, if I place a trade, I'm only having to stump up 4%. If I whack this up from you know, the 100k to a million, I'd have to stump up 13%. But again, it doesn't really matter too much if you're trading sensibly. So that's that. Light mode, yeah. This, I much prefer to have the take profit and stop loss on the entire position. So what this means is that, let's say I'm placing a trade, for example, like sushi, right? Or if I'm placing a trade on any low liquidity pair, I'll show you. I mean, here it's only like 9 million in the last 24 hours of turnover. It doesn't mean how much liquidity it has. The way you do that is, if you then go straight across to 100%, it'll say that the maximum order size I can have on sushi, as in per individual order, is only 20k. So for myself, when I normally place a trade, like, and for example, let's look at sushi. I'll show you what I mean. So let's get to the 4-hour chart, which is my normal hunting ground. Let's say I wanted to go long right at market, and I wanted my stop loss, I don't know, down here, 1.88. So I'm going to go long 1.88. So look at this. It's saying that the maximum risk I can have is $1,300. I can't put any more. I can't just type, you know, 50,000. And then, maybe I could actually. Wait a minute. I've got a feeling it'll default back to whatever 100% was. Yeah, there we go. Because so maximum 100,000 sushi per order. So what this means is that if I end up having to click this button like 10 times. So if I'm trying to find out what 0.25% max risk is on my account, let's say I've got I don't know, let's just, for example, say I've got that times, so that's 1%, divide that by 4. So $10,000 is 0.25%. So in order to get my full $10,000 in, I'd have to basically click long, so I'd have to open that and then keep on clicking it. But the cool thing is, if I've set my stop loss up for the first one, every time I click open long, open long, open long, it'll all go under the same stop loss, which is why I like having TP and SL on the entire position. Otherwise, I'd have to keep putting in the same bloody stop loss every time I buy. Notifications. I turned sound and notification off. Maybe the margin call would have had some sort of ding dong bell. Who knows? Hedge mode means you can trade up and down at the same time. It's probably worth doing. Maybe actually no, for most people, 99% of people watching this, don't do it. Just if you're going to short it, just short it. Don't do longs and shorts at the same time. It will get very confusing. So that's that. You can also close a position by clicking the close bit here and going on to whatever, but I just prefer to, you know, if I'm going to close a position, I'll literally go to the trade. Let's say I want to close AVAX, and I'll just click market and then close the trade. What else is there? Am I missing anything on this trade? Nope. Yeah, I guess if you wanted to find out which has the most liquidity, just go into any asset, click 100%, as in most liquidity per order, and it will show you. So here on sushi, the maximum trade I can place is only sort of 20k order value per trade. Whereas if I was going to click on Bitcoin and click 100%, I could place a trade which is $3.3 million. So that's obviously where all the volume is. The 24-hour turnover doesn't necessarily show you how much volume it has. So, for example, GMT, if I clicked 100%, it's still only 80k per trade, compared to Bitcoin, which, you know, is not as much. So that's really the bare bones of it all.